Right, good afternoon, everyone. Can you all hear me? Good afternoon. Can you all hear me? Right. Okay, I believe this is group combined B and C, no? This is right. Recording it, and right. By the way, who is the monitor? Lecture. No one is here. Monitor is not there. Right. Okay, friends. Now, can you all hear me? People at the back? Here, no? Right. Okay, friends. Now, today, our topic is a very interesting one, particularly for those who are doing ESRPs, right? It doesn't mean that it is not important to others, right? Especially now, all of you all have chosen your respective option, no, for the final project. You are doing what? MFRP, right? So even for case studies, sometimes you are studying the success or a failure of a particular company or an entrepreneur. Very seldom we study the failures because the reason is we don't have the facts. Most of the failed projects, companies are virtually closed down. So you don't have the access to the information. So what we are doing is almost the companies which have reached the success. So for them also, there is an entrepreneurial element in that. So you are studying about the business model and the plan of that particular company, which has been conducive to the success. So therefore, this topic is important to case study option as well. And for the MFRPs, and some of you all are doing the research now. So I'm trying to figure out who that person doing entrepreneurship research. You are yeah, right. So even the entrepreneurship research, they also to a certain extent, you need this part, business model and the business plan. Nevertheless, in your outside MBA activities, you all are working in particular, I believe, commercial companies or government entities, whether it is commercial or government, right? It is doing some form of an activity which is involved in business, right? So therefore, them also, this is very important. So with that outset, let me spell out, right? As a custom in all my lectures, I have some ground rules, right? So you would have heard about them, no? Right? Tudilan would have heard about, no? Right? Okay, so the first one is about the timing. So we are starting at 2 o'clock, right? And this goes on till 5 o'clock, no? 5? 4:30, right? Right, 4:30, that is, we are running a marathon without a break, no? Right. Okay, so then we'll stop at 4:30. So I will not exceed 4:30, yeah? Not even a minute. So that is the first ground rule, right? You should cooperate. Second one is about you all have got the handout. So I am not asking the question whether you have read it or not, right? Anyway, this handout comprised of some PPT slides too. But here you might see some new slides, right? You haven't missed anything, but only thing what I have done is I would have added more visuals, explanations, sorry, so on and so forth. That is to give a better illustration. So you won't miss anything, but only thing at the end you will get the recording as well. No? Therefore, you can replay and then see anything if you feel important that is not there in your PPT handout, you can capture it from this, right? So that is the second one. And the third one is about participation, right? So this from 2 o'clock to 5 o'clock. So that is the most difficult period. So therefore, I need 100% participation. So whenever you have a doubt, right, or clarification, you are at liberty to raise your hand up, interrupt me, and then ask the question. Irrespective of whether it is relevant or not, right? You can ask. You are free to ask the question, clarify. I will do the clarification, subjected to the first ground rule. So if the clarification goes on till 5 o'clock, so that won't do. No? So therefore, subjected to the first ground rule, I will give my best explanation. So what I need is the participation. I too might ask question from you all, right? So in that case, you have to answer. Unfortunately, since this is a hybrid one, so there's an audience online as well, no? So unless you use the mic, so we have the mic, no? Right? So it's all right, right? So unless you use the mic, our online friends won't hear that one. It will not go for the recording. So therefore, depending on the situation, practicality, if I am asking something from our audience friends who are sitting there, I might not be in a position to pass the mic there practically. Anyway, we will see how it happens, right? So I want your 100% participation, right? And the last one, in fact, is not a ground rule, but just a general request. The request is in the process. I may be talking about real life examples. Perhaps I mention, I will mention the names of some companies, going concerns, some personalities, perhaps the CEOs, the heads of organizations, I might mention. So my whole intention is not to give my interpretation or criticize what they have done, right? So my whole intention is to give, once again, a better illustration. So then only when you mix up things, theory with the practicality, then only you understand things, no? So my whole purpose is that. So treat it in that spirit. So the request is, since I am mentioning these names, please keep it to yourself, huh? Right? Don't go out and then discuss, right? So agreed, agreed, madam, agreed, right? Okay, let us start. So with this one, friends, so we have earlier in the MBA curriculum, we had these two in two topics, two sessions, business model and the business plan. Now, due to some reasons, we have amalgamated together. Therefore, this is a bit of a comprehensive one. So I'll try to make it as clear as possible without omitting anything. Okay. So let us start. Our objectives of the session today is, I have given you the handout. Only thing I have given you now, see, I don't see, can you see the colors here? So those are the keywords that I have highlighted. So since these are new concepts, business model, business plan, you would have heard about the business plan, very seldom it's the business model. Therefore, exactly. So we will look at the definitions. At the master's level, it should be the academically valid definitions, right? If you refer the literature, then there will be a lot of definitions on the entrepreneurship, entrepreneur, business, business models, etc., like in the leadership module, right? So therefore, we have to capture all these academically valid definitions. Why? Any reason, madam? For right. Why should we refer to the academically valid definitions?
Because academically valid definitions are first researched and recognized.
Mm.
And also, as part of MBA, it is a professional and academic qualification. So
Yes.
we will rely on academic sources more than any other definitions we find online.
Yes, thank you. Because we have dictionary definitions as well. For the dictionary, in the dictionary, it is for the ordinary person who is reading. If I am interested in something, some topic, and if there's an alien word come, then I refer to the dictionary first. And then for me to get a general opinion, general understanding on what. But we go beyond that one, right? So that is, as you rightly said, these definitions have been tested and proven, accepted by the larger community. And for us, the benefit of that is eventually you will be writing your project report. So whether it's MFRP or ESRP, in the project report, there is a dedicated chapter called what? Literature review. So in the literature review, it's a massive chapter, right? So we have to somehow fill it in now. So for that one, these are some valuable stuff. So whether it is your topic is related to MFRP or ESR leadership or whatever it is, initially we have to give the definitions, key definitions. So this is something where that's why we want to look at academically valid definition. So we'll be looking at the definition first at the outset. And thereafter, we are going deeper into the subject. There are different types of business models, right? We look at those. Thereafter, identify the key elements of an effective business model. Thereafter, we are talking about build up an understanding on some two widely used business models. There are many business models, but there are two accepted widely used models. So some of those are coming in, be useful to your projects, those who are doing MFRPs, etc. Right? So we'll be concentrating attention on out of many two widely used models. And thereafter, we are talking about the business shifting from model to the plan, business plan, elements of that. And thereafter, mingle those together. how to align business plan with the business model. So that is the purpose. Eventually, we'll be looking at, so very good that we are very good at talking about success factors. Other side of the coin, the failure factors, right? So we look at that as well. Some people who have adopted good business plans eventually encountered some failures. We are not going to analyze what those failures are, but develop an understanding on what which areas they would fail. So that would be helpful to us. So that is the game plan. So with that one, let me show you a particular visual, right? Aimed at understanding not the business model. We drop the adjective and then look at the main word, model, basics of a model, right? What are those visuals, by the way? You recognize those? Top one? Gayan? Top one? No idea. So one answer is BMICH. Any other answers? Top one, huh? Madam, looks like BMICH. Is it? Right? Yeah. What is it? Cinema hall, no? BMICH, right? Can you raise your hands up those who believe that that is BMICH? Or raise your hand those who are, you don't believe that it is BMICH? So that means all accept that it's BMICH, no? Right. Okay. But is it really the BMICH? Then what is it? Smaller version, right? Smaller version in the sense scale. Hmm? Right. You understand something. What about the second one? What is it? Yes, ma'am. Terminal, right? Airport terminal, right? Any other answer? Tudilan? No? You use that term, model, right? Right, friends. Now, these are replicas of some objects, which we call models, right? So the model, though we call it, but models have certain characteristics, features, right? Characteristic and features. By the way, in this management topics in MBA, we are having these, we deal with something called the conceptual clarity. So I use two terms, features and characteristics. Are those the same? Features, characteristics. Are those the same? Yes, madam. Features, characteristics. Are those the same? Fuzzy, no? Little fuzzy. So the thing is that that is why, especially those who are doing research, right? They have to, have this conceptual clarity before that, right? So the thing is, what is your general opinion? Is it the same or different? Features. Whenever a question is asked, what we have to look at is how do we answer? Frame and answer is think what we know about that, our past experience. Anywhere we have come across that word, somebody would have told that, okay, your features are similar to my father's features, something like that. So like that, then you paraphrase that one with the question and then try to interpret what is feature. So in that case, features, what are those? Certain things like similarities, right? Features are things which we can capture through five sense. Those are features. Basically what we seek, right? Features. And characteristics are always not visible. It could be latent, right? Characteristics are, in fact, if you go to the definition, look at that, you see those are fundamental underlying things which are composed of that particular object or anything, right? Characteristic color of copper sulfate is blue. So anywhere in the world, that would be blue, right? So like that, those are underlying things. May not be visible always. So characteristics. And then there can be people who are getting angry, right? Are there any people here, audience, who are getting angry? Yes, always everybody, no? But now can we see that they are getting angry? No, those are hidden. So those are their characteristics. Features, of course, we see. And but here in this case, in most of the cases, we'll be interchangeably using this word. So we are talking about, my question is, right? Common characteristic of any model. Now, my friends, you all accepted that these two pictures represent models, right? Not the exact object, but some replicas it represents. So now this is a small exercise for you, right? To get rid of the monotony, right? So common characteristic of any model, can you write down either in a piece of paper or laptop? If you are to tech savvy, then you use it, right? So I'll give you about 3 minutes. Characteristics of common characteristic, any model. Of course, this slide may not be appearing in your handout, no? Distance, you can see that, no, right? Off the modality of मेरे बात बोलो no मैं तीसरा नहीं है demo से right. Can I get the answer, Sujan? Right. On, no? Right. Just check. Tap it tendency. Press it on. Right. Okay.
So I think one of the common characteristics of any model is it's measurable and the scalable.
Measurable, scalable, one need. Right.
Right. And can be tangible also.
Sorry?
Tangible.
Tangible is where you can touch and feel.
Yes.
Is it? That is what you mean. Yeah. Right. Okay.
Mm.
Right. So anyone who has gone to use any AI tools and then found the answers, you just simply go to any of the GPT or whatever it is, because it's not an exam now. You can go and then you can get a lot of answers to that one, right? But as far as the common characteristics are concerned, now one thing is simplicity, not really the simplicity, because it simplifies the reality, right? BMICH, that one, anybody could understand what we saw was that particular BMICH. And you all have to go to BMICH. I believe everyone will go next year in November, right? Next year in November for what? Your convocation. So I believe everyone will go there in next year, November. So BMICH. You know where you are going. So because that is, it's a real one, but in a simplified way, simplified reality. So any model now, Sujan was talking about the tangible models. Friend, it need not be tangible always. What we are talking today is an intangible one, business model, where you can't touch and feel. So in research management, we see a lot of models. So those are not tangible, need not be tangible always. Architectural models are tangible. Okay, right. And the next one is, right, so I will just mention those. Second characteristic called the representation. What does it mean is it should represent the, here it is mentioned, something, an idea, something or idea or process. You would have seen in literature certain diagrams, arrow diagrams, boxes, connected arrows, etc. So those are models. In research, we talk about the conceptual frameworks. Those are models, type of models, right? So that is where either an idea, processes, etc. using what? Symbols, diagrams, so on and so forth. And next characteristic is there should be a logical relationship. Logic should be there. Otherwise, it is just a drawing, painting. Difference between the painting and the model is that because here you see the logic between the elements, right? And the other one is it should be backed by, this will you will not see, but backed by some assumptions because models are not universal. So there are limitations. Applicability is limited. For that, we should have certain assumptions on what circumstances those should be applicable. So here, assumption on how things work. And the next one is, right, there should be a purpose or utility. That is, means it should explain, predict, communicate, to be used for decision making, etc. Otherwise, it is just a drawing, painting, exhibit. It becomes a model when this characteristics is there, right? It should have a purpose, right? Then the next one is testability. Testability in the sense, most of the academic models. So once it is written, given, shown, it should be testable in certain other areas, right? So that is a major characteristic for academic models, testability, adaptability. And the last one is communication tool, right? So once a model is there, it should be communicated. There, so communicatability is there for whom? Ideas to stakeholders. Who the stakeholders are? Anyone who is connected, affected, or who are interested in stakeholders. If it is an investor, right? So somebody is preparing an investor plan. Investor may not have time to go through everything. But the model will depict everything and then it should communicate him the thing, and then it is for him to see and take a decision, right? So those are the common characteristics of models. Still, I haven't gone to the business models, only the main domain model, right? So for us to build up an understanding, we have to, understand the key concepts earlier. So that's why we are dwelling on the model, right? So then I will just give another example. Now all these characteristics. Now my question is, in a model, should all these characteristics or features be omnipresent? Should be present at once? If anything is lacking, you don't brand that as a model? What is your opinion? Yes, madam. If anything is missing here, you don't call it a model? Can, no? Yes, because the BMICH1, that one where we don't see everything here, right? But we know that is a model. So majority of the characteristic features are there, right? So then I will just give a small example once again, right? To break the monotony. Now I will show you 3 types of models. Then our exercise is to see whether which features are there in that particular one. Okay, so that is an exercise for all. So here there are the 7 characteristic features now. So let's see whether all 7 are there. So there are 3, M1, M2, M3. So what is the first one? M1 is a Google map. Google map is a model. That's a model, not the exact place no, where we see it's a replica. Second one is what? Weather report. What we see in the screen in the on the TV or rather your laptop or phone, weather report. And the third one is sort of a diet plan, it seems, meal plan. Yes, right. So these 3 are different types of model. Now your exercise is right. Just tick which characteristics are visible, seen in each of these. Right? Is the exercise clear? Exercise is clear, friends. Who at the back? Clear now, right? Okay. just a matter of ticking, or you need not write if you want write. Otherwise, you just spot those and then tell me, right? So since these terms, the features are easy to understand, no? So otherwise, I would have toggled back to the previous screen and then shown you what those descriptions are. But it is not a big deal, no? Can understand, no? All are given in simple terms, no? Done, finished, right? Shall we jointly do it, right? First one, the Google map. First one is this M1. Na? Simplified reality, is it there? Anyone who believes it is not there in the Google map? You believe it is not there, right? It is there. All right, okay. So first one is simplified reality is there. Okay, first finish the M1, and the next one is what? Representation. Does it represent? Remember, what is their main features are represented. So what is the purpose of a map? Right, where we have to find our route, right? So representation. Hmm? It represents the essential things, right? So then there, why it is for somebody to see the landmarks. If you just expand and then see, you see that, but there is to a limit, no? So not all features, right? So that is there. And about the logic, logic is relationship between each elements, logical relationship, right? Is it there? Is it there? You don't have to have a logic in that, no, because somebody is just looking at, right? So the thing is that where it doesn't give any other, only thing if you tag it with the directions, where sometimes there's a rocking person is there, no, then in that case it is a logic thing. And then in Google, sometimes it gives the heavily traffic areas to be avoided, etc. In that case it is, but this is a static picture what you see here, right? Here in the basic version, it is not, right? And the third one, assumptions. Assumptions in the Google map, are there any assumptions? Yes, because the thing is that map is it not the updating online? No. So that is something where they had taken that, captured that, maybe with a time lag. If somebody has put up a building or something just little while ago, it will not appear in that one. We assume that this is the accurate, exact one what we see now. That is an assumption. Then the next one, purpose, understood. No, there is a purpose, right? Then thereafter, testability, adaptability. Yes, we adapt that one and then see, because no one get lost by going through the Google map, no, right? You don't agree, right? But sometimes it happens, no, because the thing is, some roads they show are in reality not there, right? Exceptions. Last one, communication tool, right? Is it a communication tool? Yes. If somebody has the directions to PIM, you can say that you, sorry, go to the Google map and then click, type PIM, and then you see that's a communication, right? So I will not be touching all others, but I will just check the next last one, na? Meal plan. So that's a comprehensive one. So simplified reality. Is it the simplified reality in the meal plan? Not as simple as the other two, but to a certain extent. No, because here we can't see the tiny letters here. There they give the calorific values, etc. Most of the information is there. So it is, of course, not a lengthy meal plan, but something replica. So that is to a certain extent it is there. So representation is where essential facts are there. That is also there. And the logic is sometimes, yeah, they have mentioned sometimes the reason out because you can't see here. So sometimes, yeah, the amount to be consumed, so on and so forth on Monday, and then like that they have given. No, then the assumptions, of course, what are the assumptions? This is to be used by a person in normal health conditions. If there are extreme health conditions or disorders, of course, this is not suitable. So the assumption is this should be used by the normal people, right? And so on and so forth. Like, so purpose is there, testability is there, testability, adaptability. Yes, somebody who can go by this meal plan and then see whether this suits me. If it is not, he can, do some modifications or do away with that one. So communication tool, acceptable. That is there, right? You don't have to go to a doctor, dietitian every time and then just get it. That is right. So like that, friends, now we all understand the characteristics or features of models, right? Now we'll add that adjective. Models we know, now our topic, business model, right? So then we go to definitions. Now here, though I said the first type of definition is not that acceptable, but for us to build up an understanding, we had to put it, right? May I ask a small question? When you write articles or things in your for your assumptions, but rather the assignments, you refer to literature now. You refer to literature. So can we quote, put the citations of newspaper articles in that? Something appeared in Daily News or something? Can we put? We can't. Researcher, we can't. You can't, right? Any person who believes that we can? Newspaper articles, right? In Daily News, the TED appeared. Okay. Then what about the dictionary things which you have seen in the dictionaries? Can you put? Have you seen in articles? Yes. In certain books, they have just put dictionary definitions. Together with that one, underneath, they have gone to the academic definitions as well, right? So, friends, in your writing, report writing, finally, you are permitted to put the dictionary definition, but that is not sufficient. Together with that, you have to put the academic definitions as well. Now, in this case, I have picked up two definitions. Now, in management context, you see multiple definitions. If you take the entrepreneurship, there may be 30 odd definitions. Still, it is evolving. Leadership, same. So that is because different perspectives that researchers adopt. So see here I am taking two definitions together with the dictionary definition, right? Okay. So with that one we see plan. These keywords are highlighted. Plan for the successful operation of a business, so on and so forth. And that is where they have this term as well, detail of financing. Then the next one is by this gentleman, Irving failed in 2014. Of course, there were definitions before 2014, but I picked up only the recent ones. Model is a representation of value logic. You remember in the characteristic that logic term was there, value logic of an organization in terms of how it creates, captures customer values. New terms, right? You would have heard about these two terms, value creation and value capture. Have you heard about this? Value creation, value capture. Separately, you would have heard. No, value you would have heard, creation and capturing separately. No, so but this is we have a specific meaning for that, value creation and value capture, right? But we build up a general understanding on what this is. No, you understand, no, because even you haven't come across, but you can just have a glimpse of an idea what is this value creation is. No, isn't it? Right? Isn't it, madam? Right? Okay. So then, right, you would have heard about value creation, right? How about you, friend? Value creation you heard about, right? Then can you tell what is value creation is? Not need not be the definition, but you understand by value creation. You want the mic? I have forgotten where I have kept it. But it's all right. Thank you. You know, I'm just doing this because just to avoid this the difficult time between 2 and 5. If it happens in the weekday group, I won't be doing this. Right, friend? Yeah. Tell whatever thing comes into your mind. value creation. If this type of a question is asked, you separate the two terms. Value, what is value? Something worth, right? Something worth, right? So is this gadget valuable? To us, it is valuable, right? But for a person who doesn't know what this is, it is just a piece of plastics. Gadget what you see is just like a torch. They are using laser beam, right? Like that. So then value is something worth it. Then the creation is something where you produce which had not been there hitherto. That is creation. Am I correct? Right? Value creation. So you create value. Now I thank you. Right. I ask you a question. Do you create value in life? Not all, no? Just dependency. Right. Right. Right.
In some perspective.
Instances you had a
Yeah, I have.
right. If you don't mind, can you share that?
In my professional
Not
life.
I'm not asking any personal questions, huh? Right.
My professional life.
Right.
I'm working as a child. So, so far I have made some things valuable.
What sort of things?
There's policies and procedures.
Policy and procedure. Wonderful, right? So certain things that you would have helped building up new policies, new procedures, which are not there hitherto in an organization. So here in PIM, if there is no policy on AI usage, right? Then somebody suggests that, okay, we will have it. If there is no policy on the plagiarism, turn it in if somebody, no one is bothered, but somebody has put it. Yes, we should have plagiarism. What is the percentage value they accept? 20%. And there's a threshold up to 30, no? Right. So then we make it 20. So that is something there, whoever who put that as a policy. It's a value creation, right? Okay, so then you did this. What's your name, please? Right. This lady, right, our friend, right, introduced certain policies to her company, HR policies, right? So that is, you consider that as valuable, right? Okay, friends. Now with that one, we understand this value creation, benefit of value creation is for whom? It is to the recipient. Value creation is to the recipient. If it is that organization, it benefits the organization. Organization is lifeless. So it is the people in the organization. That is value creation. PIM offers master's degree programs. So value created is for whom? Those who follow those courses. So remember in marketing or strategy, wherever you come across this term value creation, right, the benefit is for the recipient, right? Value creation. So I used another term called the value. What is the other one? Value capture. Friends, this value capture is for the person who gives it, right? So for the organization, it is value capture. Recipient, it is value creation, right? So if you come back again, we take the metaphor of PIM. PIM offers master's degree programs. So here the value creation is for whom? That is for master's degree program. Value created for whom? Those who follow the MBA courses. Why we call it value? Because earlier they were non-qualified. Later, with the degree, they become MBA qualified. So that is the value created. So value capture is for PIM. What is the value capture? What is the benefit that PIM is getting from for that? What is the benefit PIM is getting? No benefit. Yes, one is income because PIM gets an income. Second one is what? Reputation as an institute which produces good MBAs. Can we say that? Possible, no? Right. Good MBAs, right? So they are. So that is something. And other than that, recognition from outside the world. That's why we have got the sex accreditation. We are aiming at getting the AACSB, so on and so forth, right? So like that, that is value creation, value capture. So here the definition of the business model that didn't have in the other type of, that in models it didn't have. But here when it comes to the business models, we tag that those two words as well. Value, how it creates and captures value, right? So that is a fundamental difference between other models and the business model. And the other one, Osterwalder's one, next definition is more comprehensive. He has added another term, value creation value capture, in between what? Value delivery. Because just because value is created, it is static. Once it is delivered only, the cycle completes. So that is his definition, right? Okay, now these definitions are not that comprehensive. Very simple, right? So let us see whether those fall in line with the characteristics that we have studied, we have just learned about the models, right? So then let us see, this is another exercise for you, right? Small exercise, right? Not very comprehensive. So here we have on the left-hand side the features or characteristics of what? A model. Now we have added another adjective called business. Now these are business model. Now let us see whether these characteristics are visible in the three definitions that we have just now seen, right? So these definitions I have given in the handout now, right? So then you can refer to those and then check whether how these are reflected. I will, for your the information, I will give the first one. Let us take the first one. First one is this. Now, simplified reality focuses only on, right? Simplified no, focuses only on what? Essential aspects of how a firm runs or exists. Simply, it's all three definitions say so. And it ignores, right, day-to-day operation detail, finances, etc. Those things they have omitted, right? So here we see it is a very simplified one. Reality is simplified. So you agree with that one? First one? Yes, that is the simplified reality. So look at other 6 aspects and then see how it is reflected in the definitions. Okay, clear? Question is clear? You have any doubts? No? Right. Shall we jointly do it? Right. So the first one is understood, no? Everyone agrees with the first one? In the business model definitions, cover the first aspect. Anyone who disagrees? Okay, accept. Anyone who disagrees? No? No challenges? Okay. The second one and the list is now see representation. Represents the process. So they talk about the value logic. So that is represented. And the third one, if we take, that is logic. Yes, going by definitions, one can visualize a logical structure, right? Where they are talking about the value creation, value capture. Hey, there is a business organization. It creates value, which captures. While giving something to the recipient, they get something in return. So that is captured there. Assumptions are about organization, market, etc. For that to happen perfectly, they make certain assumptions. Market behavior, right? Less turbulent market, so on and so forth. Then purpose, yes, serves as a strategic tool to design that part we don't know yet, right? We haven't learned that, but it is being used for that purpose. The next one is testability, tested through that metrics. Metrics means they are things we use for measure things, right? For profitability, so on and so forth. That part also we haven't learned yet. Last one, communication tool. Communicate the firm's logic to investors, so on and so forth, right? If you refer up to annual reports of certain companies, in the annual report, they dedicate a particular area for their business model, right? If you take the commercial bank, there's a particular area, whatever business model is. If it is a manufacturing organization, they dedicate certain areas, what their business model is, right? That communicates to whom? Those who read the annual report, who are reading the annual report, those who are interested in maybe the investors, maybe the employees, so on and so forth, right? So like that, now have we got a general understanding on what a business model is? All of us have got, right? Anyone who is still have a doubt about what a business model is? No one? Everyone is clear? All of you all? Right? Good. Right. In fact, when I was doing my MBA here, before we talk about the business model, and then our organization, the place where I was working, they were talking in the meetings, a lot of things about business models. I didn't understand anything. So then I asked my boss one day, was actually, what is our business model? I asked. Now, what he said, the answer is, he said, our institution's business model is a very novel one. It is not there in any other organization. Then he looked at his watch and said, I have another meeting. I will meet you in the evening. That evening never came. Right? So some people talk about the business model, right? But sometimes they are not all, right? Though they talk about the business model, but only thing they may be knowing, but can't explain. We have to give due credit to the bosses, no right talking. Right, friends. Now, with that one, let us move forward. Right. So our next one is about, now there is something called the business model archetypes. Archetypes, you heard about the archaeology. So archetype is basic, fundamental, earlier models. Now we have the hybrid, developed models. Before those came up, there are certain models which had been in practice by entrepreneurs. So there are many, we'll talk about that in a snapshot view. One thing is the retailer model. Anyone who can tell me what the retailer model is? Retailer model. Hey, that mic. Who had the mic, please? You have. Retailer marks here. Retailer model. What is a retailer model? I am sorry, I am always giving it to the front people. Huh? Yes. What is a retailer model? Now remember, these are business models, huh? Not that other models we are talking. Retail business model.
Directly selling to the product
Sorry,
to the consumers.
from seller to the
Yeah,
consumer.
It's like
That's
not
it.
manufacturing, buying from someone and selling to the consumer.
Exactly, because the thing is that person easy manufacture no, he doesn't.
Not-
Does he take larger stocks?
Yes,
Not larger, maybe sometimes sufficient stock, right? And directly to whom?
the
Consumer,
consumer.
end user, right? That is simply as retailer. So the next one is where we talk about the wholesaler model, right? That I don't have to know what the wholesaler model is, right? So it is before the retailer, wholesaler gives it to him, wholesaler model. And the other one is, we know, that is the manufacturer model. So these are the three people. Manufacturer gives it to the wholesaler, wholesaler gives it to the retailer, right? So these are archetypes why earlier manufacturers were doing only the manufacturing part, giving only to the wholesalers. But now it is not existing. So this is maybe in the past. That's why we call the archetypes, right? So the next one is where fee for service model. Fee for service model. So do they manufacture anything tangible? No, only a service, right? So can I get an example, please? Fee for service, madam, right? Go ahead, right. Yes.
For example, visa services. If you want to get your visa done, we go to
Yeah, in
travel
service,
agents.
banks, salons, whatever, whomever, vehicle service, everything you call, that is where fee service, even the educational services, etc. No, right? So that we understand. And the next subscription model, right? Subscription model. Without the mic, it doesn't matter. You tell. Subscription model. So look at the explain. Customers pay recurring fee to access and become active. Apps, yes, anything they are subscribe, right? Or where you get access, right? Netflix, whatever you call it, right? So that is understood. Then there's another one called freemium model. Freemium model, right? What is freemium model? Any idea? Yes, please. Yes, that is there because we see certain things where basic things are free, right? So even in where ChatGPT, whatever the AI tools, basically anyone can access them, but later they said that if you go to the premium, etc. No, so like that, this thing is free. By the way, that I'm using this term ChatGPT and no, I'm not recommending it, right? I'm just, for example, I'm telling. So don't tell anyone that I have recommended it, right? Okay. Okay. Okay, then the bundling model we understand. Buy one, get one free, etc. We see, right? So bundling models. Then we have the franchise model. Franchise model. Yes, madam. What is franchise model? The exit. McDonald's is it there still? No. Right. Yes. Okay. Right. So, but when it was there, it's right. So like KFC or whatever it is, we have no franchise model. So need not be the multinationals. Even that if I want to start a PNS, right? And then I can just approach these people and they say that I like to have a one at my place. They look at my place, do the feasibility, and then just they provide me everything, side edges and other technical know-how, everything, right? And thereafter I do. I operate my thing as PNS outlet, but that is not owned by PNS franchise. Good. So examples I don't have to tell again because now we have been talking about, right? So it continues, right? So razor blade model. Now, friends, in good old days, right now these razors, now we have all these built-in razors. No, earlier those were separable. Their equipment is there. You detach that and then put the blade. So that is why this term had come, right? Razor blade model. Basic product, base product is sold at a lower price, and other things are expensive, right? Can anyone give an example, please? Right. How about you, my friend? Can you give an example for this razor blade model? You understand the concept, no? Right? That is where you have an item. Basic one, base product is sold at a lower price. But it alone is not enough. You have to have, put some the consumables thereafter to use. Certain things are replaceable. So those, of course, are relatively costly. Any example for that one? Sorry? Mattresses. Right. So how it happens? Beds and mattresses. Right. So the thing is that comparatively, you believe that bed cost is less, is it? Right. So this is something where base product, of course, if they just take the cost of production and then try to justify that cost is formula will not work. They generate profits, assuming that they will sell subsequently all other consumables attached to that one, right? So that is the so-called razor blade model. But the other one is it is common reverse razor blade model. So the base product is, unlike in the previous one, it is a high priced one, right? Can you give an example for that, please? Yes, madam. Can you give an example? Reverse razor blade model. So definition is base product is expensive. Other way around. Sorry? Yes, that is also.
Printers.
Yeah, that is printers, right? Printers, yeah. What is the other one? Ink cartridges, right? Sometimes the vehicles, even the vehicle, car, right? Expensive. But thereafter, spare parts, right? So we can get a lot of examples, no? Right. So that is one. Now we see all these models, we see in the reality, though we call these are archetype models. So few more. Distribution model, I don't have to tell, we understand. They engage only in the distribution part. And there is something called the leasing or rental models. So that is they rent, hire equipment. So that we understand, no, I don't have to explain. Right. So there is another question that I have posed here, but I am not going to ask that. Right. You yourself will see this. What are the drawbacks of archetype models? So that I am not going to ask, that is up to you. So then we'll move on to the most important part, that is business model canvassers. There are things called business model canvassers, right? Introduced by, basically there are two scholars jointly did that, that is Osterwalder and Pinion, right? So these two gentlemen jointly did a research and then introduced something called business model canvas. So these are the models that we used. And I told that in our objectives, we will be concentrating on two popular models. No, one is this. So they call it the 9-block model. So as the name implies, you understand that there are 9 areas they are talking about. 9-block model, right? So this is introduced by them. Business model. Why they call it canvases is where you can draw it in a piece of cloth, canvas, and then mount on the wall. And at a distance, you can see. So CEO or whoever who is using that, right? It is easy for him to take decisions using that one. That's why they call it business model canvases, right? And the other one is a development of that one. So because they have found whatever thing Osterwalder has found is for larger established businesses. But most businesses start in a smaller way. So that model for a smaller businesses may not be suitable for that. Astroworld's one may not be suitable. So another gentleman has done the development of that, and then he's Ash Maurya. So he's an Indian person living in US, right? He has introduced something called the lean startup model or lean canvas. So we'll be looking at these two models, especially those who are doing ESRPs. They had to use the second one, Ash Maurya's one, because all of you all are starting something new, fresh. For that one, the Former one is not suitable. So that is the model that ESRPs should use. But for researchers you are doing, if you come across anything, there is no separation. Even you can go for both as well, right? Right, friends. Now let us see what those are, starting with 9-block model of Osterwald. Right? So here it comes like this, right? So these areas, they are concentrating organization, customers, offer, economics. Fundamentally, these 4 areas they are looking at. So one by one, let us see. So the first question they say is customer segments the firm interested in serving. Customer segments, right? So why customer segments? Why not customers? Why customer segments? Yes, madam. Can you answer? Why customer segments, not customers? So is it the same or different? Customer segments and the customers. Same. Customer segments and customers, right? So anyone who believes different, customer segments and customers. You believe it is different. You also believe different, right? What is the difference? Customer segments and the customers.
Just like based on their attributes.
Yeah, because the thing is all are customers. We all are customers, right? But all are not same. Homogeneity is not there. So therefore we segment them, right? Depending on the various measurements, right? So that is customer segment. That is very easy to draw out strategies. So that is why we always talk about the customer segments, right? So then the customer segments. First of all, start with that one. So business start with that one. If the customer is not there, then of course there is no business. So that is why we have started with that one, customer segment. And to customers, what they should give, they should offer something of value, right? So the term that they use is value proposition. They propose something of value propositions. It goes to the customer segments. And with that one, there is something called distribution channel, because customers, organization doesn't come together there unless there is a channel. So both should, that is why arrows converges into that channels. And thereafter, this has to be continuous. For that continuity, they should have the relationship management. So that also has to be taken into account. Now we have 4 elements here, right? Value, the customer segments, value proposition, relationships, so on and so forth. Right. Now all these things to happen, there should be, after that, there should be a revenue generated to the company. Revenue comes if this thing happens perfectly. So there is one area. Now that is about the right hand side, about the customer side. Then about the organization side. So for that one, these are the questions. What specific offers, way of distributing, so on and so forth. All the answers to these. Then other side comes for organization. To make this happen, they should do some key activities, not all activities, some fundamental key activities. So those are the things which appear in the other side, key activities. Okay. And with that one, what are the activities organization should do? And to carry out those activities, there should be organizational internal strengths. They call it the resources. So what are the resources? Key resources for that one. And the next one is who are the partners. So because if the person can't live in isolation, so there should be some people who are formally or non-formally partnering with the company. So that, of course, we are partner networks, may not be one person, right? So don't bother much about these arrows going crisscross here and there, right? But that is the relationship. And after that, with all these things to go smoothly, there should be a cost involved. So what is that cost structure? So basically, these are the areas that Osterwalder was talking about. Now, once all these areas are being taken into these blocks are split, it comes to something like that, 9-block business model canvas. So it appears like this, right? So this model had been in practice for a long time. So this is something that where the theory and the practice merges together. Otherwise, there is a fundamental allegation in management that all management are hypothetical things. Theoretically exist, but not in practicality. But this is something which merges, which denies that hypothesis, right? So this is something which is in real use. So this business model, 9-block business model, is something where outside MBA in your respective organizations, if you happen to look at what our organization is really doing, right? Try to fit that into the definition, you will see, you will be answering with all these areas coming under the 9-block model. 9 blocks. Okay, there is nothing outside, only 9 blocks organizations, right? So with that one, let us see, right? Again, if I take an example, customer segments may be high net worth individuals, and then so on and so forth, value for money, right? And then if it is channel, maybe direct or online, whatever it is. Then thereafter, customer relationships, right? So how to maintain the relationship, etc. In fact, those are the areas where the organization, when they plan, right, they have to constantly update, mount this 9 block one on the wall as a canvas, and thereafter do the fill in the blanks part. Write down what is our segment, and then if there's a change, erase that one and then put it. That is what the business model is being used for, right? So therefore, all these elements are there: income, so on and so forth, right? Okay, now we'll do a small exercise. This is the exercise. So all of you all have to, fill up the 9 blocks, craft the business model for these areas. First one, all of you all are comfortable now. Anyone who has not been to PIM cafeteria? Everyone has gone, no? Right. Imagine you are appointed as a consultant by these people, our canteen people. And then you are supposed to, right, formulate the business model for PIM cafeteria. So you have the 9 blocks. It's a matter of filling the blanks. Okay. Is it clear? So thereafter, we'll go into others. So LinkedIn and then any past ESRPs, I can give an example. And thereafter, any other organization of your choice, right? We may not go into all, but let us do the PIM cafeteria. What we have to do, first of all, take a piece of paper, or if you are again comfortable, you can use the laptop and then just draw these 9 blocks, right? But piece of paper may be comfortable, right? Even in the tables, you can, jointly do it. No harm, right? You can jointly do if you want, right? Rather than everyone is doing. For PIM cafeteria. Is the exercise clear, friends? At the back? Rear seaters? Okay, you are clear. Okay. Vibration. Okay, friend, with the interest of time, right? Shall we see what we have done? Okay. Who is with where is the mic, please? Who is with the mic? Ari. You can give it and then answer. Right, friends. Shall we start and then see where we are? Right? Okay. Where shall we start? Right, where you have filled for 9 blocks. Right. Shall we see where we are? Right. Okay. So, friends, listen. Our colleague is talking about. Right. What is the block you are talking about now?
PM20.
Yeah. That out of the 9 blocks, you have handpicked which one?
Key partner.
Key partners. Yes. Press send and see. You see the lights. Lights on. Right. Okay. Right. Okay, friends. Yes.
Key partners.
Key partners. Key partners. Yes.
PIM admin.
PIM admin. Key partners.
Learning partners.
Learning partners. Okay.
Suppliers of vegetable, fish, meat, and all their raw materials.
Okay. So now I'll stop there. PIM admin and thereafter learning partners and third group you met the suppliers. Right. So shall I ask this question? Learning partners fall into that one or the customer segments? Right. So partners, difference between the partners and the customers, right? So the difference is partners, right? They bear the loss, share the profit. If there is a loss in the PIM cafeteria, right? So then the partners also, if students are there, are they bearing the losses? Right. On the other hand, we don't share the profit as well, no, right? So that is the criterion. How you separate. Otherwise, there may be small differences between. Sometimes we find it difficult to identify whether the fellow is a customer segment or whether he is a partner, right? So then there, that doubt is 100% acceptable. So this fuzziness is there sometimes, right? So then there are PIM cafeteria, that those are the segments. Anything other than that? Right. Okay, so then that is about that particular block now. And then can we talk about the block of, can you pass the mic to your friend there? Right. So any customer segments, please. Right. Customer segments.
Customer segment, student and other service user companies. Some of the companies.
Students and then
other-
thereafter.
Other service user companies, some are companies.
Yeah, because there are people who are working here now, then repairs and all that. Those are the people.
Some of the companies hiring the holes and.
Yes, because other than that, there are
and
executive
also-
EDPs, executive development programs that are taken place.
And
here.
also PMI,
Good.
PIM staff.
Yes, right.
PIM staff.
So that is where we see the customer segments. Very good, right? So can you pass the mic to your friend over there now? Right. Okay. So then what is the next block that you can elaborate? Values. So
Values.
here we see value propositions, no?
Value proposition.
Value propositions. Right.
Affordable food and quality foods.
Affordable food and quality food. Right. Are you talking about PI cafeteria? You know, right. Nice. Okay. Right. Okay. Carry on. Right. Right. Okay. Then next one. He was wondering whether we are talking different cafeteria, right? Okay.
So I'm going to talk about channels.
Channels, yes.
Yeah, in channels mainly we can't directly contact channels to when we talk about getting and serving foods. Then also for payment terms, card payments and
Right. QR is not there yet, but only thing. But the services are basically all the over-the-counter services, right? Over-the-counter services. Right. Okay. Can you pass the mic to any of your colleagues there? Right. So, madam, can you elaborate one more block?
I'm going to talk about key activities.
Sorry, key activity. Wonderful. Yes.
So, mainly food selling,
Yes.
selling food and delivering food
Mm-hmm.
and their branding their
whatever the branding, the little
That work. Right. Okay. Those are the things, right?
Yes.
Don't they cook?
Yeah.
Right. Cooking also there should be there. But those are key activities because that is the reason why in this constructing the business model, we have to look at all the activities. And this is not a one person's activity. It's a collective brainstorming, right? So especially, but in the ESRP, our friends, they don't have the luxury of getting other people's help. But the thing is, all those are doing ESRP, they have to think carefully. You put yourself into another person's shoe and they see whether I have captured everyone, right? So like that, where we have to see whether all key activities are being captured by us. So then only our business model will be fruitful, can be used as a strategic tool. And we can't afford to miss anything, right? Okay, thank you. Right. So can you pass it to your friend there? Right. What is the block you are interested in telling?
Revenue streams.
Okay, right.
Generate revenue by selling beverages
Yes.
and the foods when catering for the events as well.
Yes, that of course is where we can identify what new area they are doing, no? Right. And then sometimes some people, of course, they get revenue by, selling the waste to some other piggeries, or here they are not doing that, no? Right, okay. Right. Can you pass the mic to your friend there? Right. Okay, what is the block you are going to elaborate out of these?
Resources.
Resources, yes, key resources. We talk about the key resources. Okay, what are the key resources?
The canteen staff members.
Staff, they are HR, yes.
Cooks and the chef.
That is HR. We put everybody under the umbrella of HR, right? Okay.
And the canteen premises that they are doing.
Yes, that is.
Also the resources that they use to cook, the things that they use to cook.
Whatever it is, yes, you understand. No? So friends, I am not going to ask others, but only thing now we get a general understanding on what items come under the each block. No, so the challenge here is to see whether we have captured everything, right? So here our PIM cafeteria, if we just look at now, these are things you have filled up now. So that is the present status. How we can use that as a strategic tool is just to check whether there is any room for us to improve, us in the sense the canteen, right? So if you are the consultant, and then if the canteen owners little and say that, okay, we want to improve the sales, right? We want to improve the number of, increase the footprint here. So a lot of other improvements. So in that case, where you have to first look at the status quo, present situation, and then see the areas where we can do the improvements. So that is how it can be used as a strategic tool. If we look at now, this is not my version. What I have done is now this exercise had been given to a lot of other MBA students, and then they are we are using the term learning partners, and then given, right? And this is how I captured in a summary. Now there have been some other elements. Other than that, they have been key partners, right? Suppliers, so on and so forth, right? Staff, visitors, because there are visitors also coming now, right? So sometimes if say somebody is accompanied by another person, is also there. So like that, those are customer relationships. I don't know why they have put a question mark there, because that I said this is not my version now. Somebody put a question mark there. I don't know why. Yeah, right. Okay. So quality, for the quality also they have put a question mark. Variety, cleanliness, right? Okay. Right? So not my version, nah? Right? Okay. Then like that, purchases, storage, so on and so forth. Now, okay, they had to look at the finances too, right? The person manager should find and do them. Then key resources. Now, these is very important. Under the key resource, they have put, because PIM provide all facilities. Water, PIM provide. Electricity, PIM provides. And other than that, those people are using our internet and all. No? So even that is, you would have seen the fellows are listening to music and all. No? If you come in the morning, happen to come in the morning, right? So like that, all these people enjoy all things. All these are provided by PIM. Even gas that is being provided by PIM, right? And during the pandemic time, it was run by a different party. And during that time, even part of their salaries were paid by PIM people, right? PIM did it. So like that, there are suppliers, etc. Okay. So then you understand cost structure, so on and so forth. But the challenge is not this. How can this be used for strategic purposes? Take the PIM, elevate the PIM cafeteria to the next level. So for that one, we can, see the improvements, right? So this is now this is again in an exercise, a set of learning partners have come out with this for sustainability. Now this is where key partners, they have taken other earlier supplier, then the delivery services, so on and so forth, right? So other look at the customer segment staff other than the networks of staff and students, right? So imagine, right? So I am having a dinner at my place. I am going a alms giving or something. In that case, I am looking for a person who is doing the catering service. So in that case, if they are good enough, they could have captured that one. If they are good in their promotions, they could have captured rather than myself. I am sure about them, right? In that case, I am not looking at any other person to do the catering part. If I am having a party or anything at my home, right? I don't have parties, but only thing. Imagine if I am having parties, then of course I can invite these fellows to, do the catering part. So that part is some evolving where you have the room for expansion. Then thereafter, yes, special promotions, customer relations, you can have a special promotion, but I think sometimes they do it, right? Special promotion they can do, especially during certain functions, etc. Right? Okay, channel over the over counter services plus even outdoor catering, even online thing they could have done. Haven't ventured into that. So value propositions, those things, and then online orders, special events, so on and so like that. Where you can see, I don't have to go through, but this is how you can fill in the blanks, put certain things, and then see whether that is working. Remember the characteristics, right? Where assumptions, testability. You just put an element and then test it whether it would work. If it is not, you close it. That's it. Otherwise, consolidate it. That's it. So that is how it is being used. No, need not be tackling every element at once. Just take one, take the customer segment, partners, so on and so forth. So that is how business model is being used as a strategic tool, right? It is not a strategy, but strategic tool. It can be used. That is where the theory and the practical overlaps. So that is why how this can be used. Theorized and then produced by Osterwalder, it is being used by us, the practitioners, right? So that is the business model, Osterwalder's one. So will this be helpful for us in our organizations, irrespective of whether you are doing ESRP or not? Will this be helpful, right? So what we can do is we can question, we can look at our organization quietly, see whether these elements, how our organization, right? Where if you are working, right? Where do you work at? Yeah, you have your own company. Now you can relook at whether I'm just putting these elements properly, right? And like that, where everyone can relook at their own organization and then see whether our organization's elements are fitting into this model, 9-block model. If it is not, then of course, as a genuine employee, you can ask your boss, the head of the organization, say that, here, boss, I feel we are not exploiting this one very well. So this is where we can expand. This is where we can, surpass our competitors. So all these inputs as genuine employees, because we all are executives, right? Executives are paid for what they think. Clerical other people are paid for what they do. Executive, what they think. So we can think and then give a healthy contribution to our organization. So that is the value of the business model, right? I have just given a small introduction only, but it is up to you to, use it in a practical way. Right, friends. Now, with that one, if you move forward, I will show you the typical business models. I will show up, right? Now, this one, of course, is straight away. If you go to the internet, then you can see this one. Go to the Google, they have shown this one. This is not what I have taken. LinkedIn. Now, here, I am not going to explain everything, but just look at certain things. Now, relationship, they talk about the customer segment. Even the recruiters, internet users, all these are their customer segments. So if the LinkedIn want to imagine if they get another competitor, right? They look at, okay, are we serving well to our customer segments who are shifting from our to the competitor? And then see, look at, hey, our customer segments are these, right? Are we helping the recruiters well? Are we falling short in the help in the advertisements? So that is how we think, formulate, fabricate our strategies, right? So like that, this is LinkedIn one. And similarly, you can go to the internet and there's a lot of draft similar models are there. And then this is something in a previous CSRP project. So this is done by a student, right? Who, of course, they call this Kitul based product. So what they say is, right? So most of these are not having any standards. So what they did was they were not producing, they were going to produce, but what they did, they made the tappers, right? Those who produce Kitul, that treacle, and then they have educated them how to do it in a proper way, hygienic way, scientifically acceptable way. And thereafter, they have made this because here these people have transformed that and a pure research into an applied research. So one of those guys are in the Weimar University. So they are one of the lecturers had done a research on this one, and then they had just taken it to application, commercialize that one, right? So like that here, cost structure, etc. So like that, I'm not going to explain this very much. Now look at these customer segments: upper and middle class, healthy, conscious people, because it's ketul that related product, people see that it is not good for diabetes. So here what they say, no, there are healthy side on that one. So like that, that's a novel project because this, of course, this project, all these projects are after doing, if you get marks above 86, that your report will go to the library. It will be there for references. And then for you to get a merit pass, you know how much you have to score? Overall 86. Overall 86. But there are the students, right? Sorry, learning partners. There are learning partners who have got, right, normal coursework less than 86. But for projects, some people have scored even 90s. So irrespective of whether they get the merit pass or not, their report goes to the library. That reports are there. So those were available. I don't know because this has been done in maybe 2018 or so. So don't know whether they have taken that report out. Right? Recent reports may be there. So this report had been there up to that time. Right. So I will just show another example about the bank. Right. So this of course is not a bank in Sri Lanka. So our banks may have a different scenario. So like that, where you can, try out and then see whether those are applicable. Anything. I'm not going to dwell on this one now. Right. But what is important is I was talking about right earlier, the second one. Now this Ash Maurya's lean startup model. So here there is a small video. I will show that video how Ash Maurya himself explains how this particular model is being constructed. So especially those who are doing ESRPs, this may be helpful. Even for others, right? If anyone is hoping to start a business, this will be helpful because this is why they call the lean canvas or lean startup model. If they are starting afresh from the scratch. So this is the model that has to be adopted. Now, there are online people now, right? So our online friends, now you also may watch this one, right? Only thing, now this is not a video which is very attractive because these are academic videos now. So no songs, no fights, etc. Right? No dancing. Right? So here, this is just academic person. Initially, you will see only that Ash Maurya is talking, and then you will see just some the diagram only, right? Just a cage-like thing. Later on only he himself will write down what is there, the content is. So initially you will see only the voice. So don't worry, especially the online friends. Now it doesn't mean that the video is not working. Right. Okay, let us see this video.
The Lean Canvas is a popular tool that's been used to help articulate a business model. The business model for a company is simply a way of describing how that organization makes money. More specifically, it defines how the organization intends to identify, capture, and deliver value to customers. So a popular tool that's been used, that has been created several years ago to help articulate how a company tends to do that, is what we call a business model canvas. It was created by Alex Osterwalder. You may have read about it in the book Business Model Generation, which is a very helpful book in understanding all the different ways that businesses can provide value to consumers. The problem with that particular model is on the startup level, it's not necessarily fully applicable. So some of the building blocks may not apply for startups until they're operating in an established capacity and have already proven they have a valid model and they're providing a solution to a particular problem. So for startups, we tend to use the Lean Canvas, which is simply a way to help map out a business model so that we can get a look at each of the 9 building blocks, and then we can make changes and attempt to validate the model. So what I'm going to do is I'm going to go ahead and go through the Lean Canvas in a few minutes to give you an understanding of really what it includes and what are some of the things that you'll write. A couple of things before I get started here is that you never write on a Lean Canvas. I'll include a link to one in the description of this video below so that you can go through on your own. But instead, in my classes, we use Post-it notes. And so that's for a few different reasons. One of those is that we can be continually changing the model based upon data that we have. So if I believe that my customer segment is a particular demographic, and I go contact that particular customer and find them and realize that they don't have a need for my product, then I can change that really easily as opposed to going to a whole new canvas. Psychologically also, if something isn't set in stone, I find that people have less of a tendency to get really devoted to the idea, right? We kind of get married to the concepts that we have. And the point here is to use this as a tool to help validate the model. So validate how we intend to identify, capture, and deliver value. So let's go through some of the areas here real quick. When I instruct students to complete this canvas, I instruct them to use what we call a customer-centric approach. And what that means is that your model should start with the customer and everything else should fall in line with them. And the reason that I say that is because until we have an idea of who we're serving, we have no way of identifying what their problems are, what their pain is, and of course, developing a solution. So over here in this right box, we're going to start with what we call a customer segment. And with the customer segment, again, we are trying to articulate who it is that we serve. We're trying to determine what are their commonalities. So we really want to try to be as clear as possible in this particular area, because the more that we know about our consumer, the more that we know what essentially problems they have, and we can develop creative solutions for those problems. Ideally, before we're crafting a particular model, we've already done what we've called a feasibility study. So we've done some research on our industry, the competitors, the market, our customer, and we've done some of the financials already. So we should have a relatively good idea of who we're trying to serve with this particular product or service. Now, the next area, once we have the customer in mind, is we need to develop and determine what the problem is. And there can be more than one, so I'm going to go ahead and put problems. And in this area, what we're trying to do is really identify 3 problems that our customer segment has. So these could be, based upon limitations that are in the market. They could be that there is not simply a service that provides a particular solution. So we want to look into the environment to see what are some of the opportunities that we have here, right? We know that we tend to focus on ourselves and develop products for ourselves, but the problem is that we need to determine if there is a customer for said problem. Now, once we've determined what the problems are, then we need to articulate what the solution for those problems are. And so here what we want to do is we want to identify 3 features about our product or service that are going to tackle the 3 problems that we identified in the prior block. And so these are features, right? So specific attributes or characteristics about the product or service. And we want to be as specific as possible. When you're filling out the canvas, what I recommend is don't take a lot of time, because truthfully, whatever you put in this is probably going to be wrong until we actually validate it, which we can discuss later on. So now that we have a solution in place, at least what we believe to be a solution for the problem, then we're going to go ahead and we're going to determine what our unique value proposition is. And a unique value proposition simply articulates 2 things. They're really related, but how we are different and why are we worth buying. And so we want to explain really in as brief as possible, and that's why I enjoy using canvases, is because they force people to be brief and not write out these huge long reports. But how are we different and why are we worth buying? Why is it that the consumer is going to go with us? What do we offer? Is it some kind of convenience? Is it accessibility? Is it some kind of security? On a basic fundamental level, why would somebody want to purchase our products and services versus someone else? All right, now that we've articulated the unique value proposition, we're going to determine our channels. And this is essentially how we are going to basically sell to consumers. So we'll look at first party versus third party channels, direct versus indirect, and also, how we communicate with customers. How do we raise awareness for the things that we do? How do we allow people to evaluate our products? Obviously, distributing them is really important. It's what we often think of when we think of the word channels. And then how do we get feedback from customers? That's a very, very important point. And we want to make sure that we have some type of mechanism in place so that we can get feedback from customers and determine what we're doing right and what we need to improve. The next building block is going to be what we call our revenue streams. Now, your revenue stream is essentially how you're actually going to make money. So we need to explain in what capacity we can, specifically, do we just do kind of an asset sale model where we have physical ownership of something and I'm selling it to somebody else like a retailer or manufacturer would? Are we going to do something like a subscription type model? Are we going to do some type of licensing deal? And obviously, there are a host of other revenue streams we can develop. You can do advertising, you can do freemium models. Those are all very, very common sources of revenue. The key thing here is thinking about as many revenue streams as you can possibly generate for your product. You don't want to be just reliant on simply one sole revenue stream, but you want to have a variety of complementary streams of income so that obviously you're not entirely dependent upon one for a bulk of your revenues. Now, of course, we know that when there's revenue, we also have costs. And so we need to consider what our cost structure is. So here, what I recommend is determining what are your, kind of most significant costs, or what we call cost drivers. So, if you are heavy in manufacturing, then we are obviously going to, take a look at those upfront costs, those sunk costs that we have. We have to, have infrastructure and equipment, and obviously it's scalable, but we incur a lot of costs at the beginning. Or if we're a service company, then our predominant share of costs is going to be labor. And so we want to outline what does that look like and have a detailed plan on, if we're going to be able to break even. And now we're getting close to the end. So there's two more that we're going to look at here. The first one, or I guess really the second to last, I should say, is going to be what we call our key metrics. And this is specifically to the Lean Canvas. You'll notice in Business Model Canvas, this is what we call maybe a key resource. Key metrics is simply how we're going to, kind of evaluate the progress of our company. And this is extremely important because we need some type of benchmark in place to evaluate the success of what we're doing. Is our model working, or do we need to pivot? Do we need to change the model in some way? So metrics are important, and they need to be specific to the model. So if you're using, let's say, a kind of a freemium type model, maybe like a Pandora or a Spotify, then metrics will look a little bit different for you. You're going to be interested in how many people actually go to your site, and then from there, how many actually will try the free version. And then from there, how many actually become paying customers, so conversion. And then how many actually do you retain, meaning once they pay for 1 month, do they continue? And your success is judged based upon those metrics. If you're a service firm, you might evaluate yourself differently. The important thing is that those metrics lead to the success of your company. I recommend that we don't focus on simply just sales, which is a common metric that people use, because it can be misleading. And if you're doing multiple things, it's not going to help you really get to the root of some issues with your business. And the last one we're going to go over, and the reason I go over this last is sometimes people don't really know what it is at first. This is called an unfair advantage. And this is something that is unique to you and, let's say, can't be easily copied. And this is important because we want to see if we're going to operate this business, if this is our model, can anyone operate the same model relatively easily? So we're looking at things like patents. We are looking at potentially connections or network or licensing agreements, things that would exclude other people from being able to operate our particular business model. And so we want to take a look at, is there something that I have that other people don't that would lead me to be more successful operating this particular type of business. Now, a couple of final points before we finish up this video. First, I hope this was helpful in kind of clarifying what the lean canvas is. But again, we take a step back and look at C and make sure that each of the building blocks is consistent with the other. And the other thing I will say is this is not a replacement for doing a feasibility study or even writing a business plan if you're seeking funding. This is simply a helpful tool to get a feel for what your model is and ultimately maybe how you can change that model depending upon what kind of customer feedback that you get from the market. We can change who our customer is. We can change the solution. We can change revenue streams. But having it mapped out is a great starting point so that you can determine where to make those changes.
Hey there, thanks for watching this video.
Right. So I believe it is clear, and then you would have noted the difference between the lean canvas and the 9-block model, right? And then here you would have noted, I will just show you now. Here, unique value proposition in the sense there should be only one. In the early one, there are many value propositions, but here in the, because when somebody is starting afresh, it should be only one he's dealing with, unique value. Other one is where this part is very important, can't be easily copied, right? So like that, where this is the difference. And at the beginning, there should be some ways of measuring whether you are going on the right path. So with this one, if we just look at an example, right? So here, this is where one of the ESRPs earlier was on, the one person was starting a business, cement blocks. So that was his business, ESRP. And then I will just show you how he has put all these elements into 9 blocks of the lean canvas. So since it is a startup one, it is not the former one with the model he has used is the lean canvas. So I will just show it, right? Now look at these elements. Now initially we'll start with the unique value proposition. So why he is worth buying? What is the difference he is making? Now here ability to supply, what is that, recruit something, I don't know what this word is, where required, maybe there's a spelling mistake, no? Quantity with, this is one of the previous CSRPs, quantity with consistency. Now the thing is, what he says is, right, in the Wi-Fi, I remember he was telling, now this is lot of block work, block manufacturer, there is no standard here in Sri Lanka. So there is no standard at all. And then all these blocks should be interlocking, no? And then sometimes the mason may find it difficult, but if the sizes are different. So his consistency, everything. And other thing is now these are, of course, you reduce the plastering part when the surface is smoother. But in some blocks, it is not so. So that is what he is telling, that will be ensured, right? The surface finish tone and so forth. And another one I want to highlight is now customer segments. So middle class families planning to build own houses, contractors, he was trying to get the contractors as well, not the end users. And sometimes he says, now there are people without putting up houses, maybe a parapet wall or something, a small structure. For that, they don't spend a lot. So that's another segment that is eyeing, right? And the other one that, this is the very important thing, unfair advantages, because now that had been done by an engineer, civil engineer, who is a chartered engineer. And he said, this is something others don't offer, certification of quality from a chartered engineer. Now he says, this is not being provided by any other person about the quality, strength, etc. So what he says is, if you just drop the block, sometimes it breaks. Now he assures that, no, this has a certification. So that part he says, some of our batchmates are there, through them I am getting it, right? Of course, not free of that, he's paying something for them, right? So like that is something. Now in another one I want to show here is now say, here, the problem. Now that is very important. When somebody is starting up a business, he has to identify a particular problem of that market segment, because then only you are addressing that one and then carving out a niche in that market. So here he has identified these 3 problems. Ordering difficulties, because he says his segment is middle class families, and most of the middle class families, both husband and wife, they are working. And during the working time, sometimes because they are busy, and then ordering everything, because these hardware stores, those people open from 9 o'clock, because during that time their schedule doesn't fit into that. So thereafter, and then even the payment terms, because what he says is, because most of the middle class people, they get a housing loan approved from a bank. And through that, they spend money, right? So then housing loan approval, depending on the approval, they are giving in tranches now. So with that one, they have the cash flow problem. So therefore, this payment should be flexible, payment term should be there. So that is something that the problem they had. And the space, because the reason is nowadays they don't have all these larger plots, maybe 6, 7, 8 purchase. And sometimes more than 80% of the houses, there is statutory requirement, not 80%, something should be kept as the free space. So entire house plan, the foundation occupies the land. So in that case, their space is restricted. They can't, the stockpile, put lot of material there. So that is restricted because most of the hardwares, they get the economies of scale. When they order certain things like say lorry load of blocks only, they get the maximum advantage of the fees. But here, now what they say is even we are providing in smaller quantities. Even somebody wants something in a this hand tractor trailer. Through that, even they are prepared, no difference in the prices. So like that, we are a lot of other things, right? So you can figure out what are the things, even channels, so on and so forth, right? Other thing now they have contacted through these people, architects. They are the people who draw out the plans. So that is the first point of contact. So like that, this was a successful project. So like that, I just want to show this one, right? So this can be perhaps another person starting the same business may have a different lean canvas, right? May have a different lean canvas. That is different. That is what entrepreneurship is. Okay, right. So like that, where you can, just get an understanding of this one. You will see the recording at the end. No, it is not given in your handout. No, not in the handout, right? So in the recording, you will see it. Right? Why I deliberately avoided it because this is somebody's project, no, somebody who has done this for the MBA. So that's why I deliberately avoided that. Right. Now, this one, of course, a social business model developed by Dr. Travis Pereira, right? But I'm not, I have just given this one. I'm not going to explain this, right? Okay, so there are certain differences in, because instead of just cost, they may write social cost, so on and so forth. Right. Okay, now we'll move on to, right, failures of business model canvases. So this is another video. Let us see it.
Business models can fail for many reasons, but there are 4 big ones to be avoided. The first type of failure occurs when your business model is built around a value proposition that helps customers get a job done that they don't care about, or don't care about enough. This sounds trivial, but haven't we all experienced entrepreneurs and executives that get deeply excited about a value proposition that is removed from the customer's reality? Something that customers just don't care about. Illustrations of this type of failure are the infamous Segway, a personal transportation device, the Apple Newton, an early PDA, or Flow TV, a portable device by Qualcomm that comes with a mobile TV service. All 3 examples were very expensive flops, and one cost over $1 billion. Unfortunately, your business model can fail even when you have a great value proposition that helps your customers get a job done that's relevant to them. Type 2 occurs when your business model design is flawed. For example, you're guaranteed to fail when your costs to acquire customers, so-called customer acquisition costs, are higher than what you can earn from them directly or indirectly over time. This is called their customer lifetime value. Here's a different example, a real-world case. The now bankrupt American company Kodak used to earn the lion's share of their income from high-margin film for cameras and employed 145,000 workers at their peak. Despite helping invent and commercialize the first digital camera back in 1975, they failed to come up with a business model design for digital cameras that would compensate for the evaporating revenues from selling film. Their new digital business model was fundamentally flawed. Type 3. Now let's assume you have a great value proposition. You're solving a relevant customer job, and you have a sound business model design. You can still fail. This third type of failure is based on external threats emerging from the business model environment. Your competitors might offer a similar value proposition at a substantially lower price because they have a business model with different economics. Your customers might be interested in your value proposition, but they might think you're not sufficiently environmentally friendly. New technology innovations might undermine your business model, or a stock market crash might dry up your funding. Type 4. Even with all the fundamentals in place, there is still one big potential for failure: poor execution. You can screw up even the best business models if you're incapable of building the required infrastructure, if you assemble the wrong team with the wrong skills, or if you lack the leadership to turn the concept into reality. Summarizing, we saw 4 types of failures: solving an irrelevant customer job, flawed business model, external threats, and poor execution. To help avoid them, ask yourself these simple questions. Are you helping customers do a job they care strongly about? Do you have the right business model that's profitable and scalable? Is today's environment the right context for your business model? Is your business model designed to excel in that given context? And finally, does your team have the right skills to execute your business model and make it reality? Quite a challenge. But nobody ever said building a business was easy.
Right. So that is the flip side of the business model. And then if we proceed further, right. Right. So, and there is another summarized version of dark side of the business model, right? Other than that. Now, this is once again done by an academic. I am not going to dwell on this one. I will just display and then make one by one. It is not right. Sometimes we misinterpret business model, and most of these points are connected to strategy. In fact, business model is used for strategy formulation and cannot be replaced by because that's what he says. It's not a replacement for business planning, and similarly not a technique. For external market attractiveness, that's a different area of study. And other than that, it is not a tool for in-depth analysis. So that part, because this is helpful in the analysis, right? Not a part of that one. And it cannot replace a strategy. Strategy is different. Crafting the strategy is helped by the business model, right? And then it is not an instrument for comprehensive wholly, once again connected to the strategy, right? It is not a technique for strategy monitoring, even the monitoring part is there. But this is a tool which helps that activity, not something which replaces that. So this is essential. We have to use the business model, but remember, with the business model, we can't do away with the planning and the strategy. So those two are there, right? So with that one, friend, we will just move on to the other one, business plan, right? But this one, of course, I am not going to dwell much on, because the reason is we all have a glimpse of an idea what a plan is and the business plan is. When the plan is done for the business, it is a business plan, right? So one plan is differing from another one because there's no hard and fast rule that it should fit into a particular the format or anything, right? But I will just elaborate. Now there are academic definitions that of course we can find like in the business model, right? So here there are about why a company should have a business plan. But out of these points, I will just mention, because they are, you have to, if you are going for a bank financing facility, they ask for a business plan, right? That of without a business plan, even a smaller loan, you can't get the approval, because they are, why the bank is asking for a business plan? Because first of all, bank should know whether the person who is asking for the loan has done a thorough analysis of what he really wants. Sometimes some people, of course, just when they get an idea, so if they just approach the bank, it is not the correct way. So that is why they want to ensure the person has studied it first himself, right? So like that. And then all this, the other thing is now it tests the feasibility. Because when I plan something, that is my brainchild. I see everything green, right? I see everything green. I don't see any obstacles, because it is my brainchild, my dream, but it is not the reality. So when you put things together in a plan, then of course you are looking at the flip side as well. So that is the reason, right? Okay. Now this, of course, again, I'm telling a structure, not the structure, right? This is another structure, because if you refer up the internet and then look at books, there can be many structures. But here, this is something which captures all the elements needed So there are altogether 7 areas plus an appendix. So these are the components usually should a business plan incorporate, right? And then if you look at certain other plans, formats, same thing may be there, but sometimes they would have split two things, the one item into 2, 3, and amalgamated few together like that. But these are the contents, right? And when you are the looking at or evaluating someone else's business plan, you have to look at whether these elements are there, right? I'm not going to talk about everything, right? But anyway, one thing is there. Now look at this first one, executive summary. We too have an executive summary to be written in all our final project reports. There's an executive summary to be written. And sometimes any other books you have seen an executive summary. In other project reports, any other reports you have, right? Though it is called the summary, friends, remember that is the one which you should write last, not the first, right? After writing the entire report, even in your MFRP, ESRP, whatever the report, make sure that you write the executive summary after finishing everything. Then you also get a vivid idea of what you have written. Then you are comfortable writing that one. So executive summary is like that. And there's a way of writing the executive summary. Even in your reports, remember, by that time, then writing the respective supervisors will also tell, in the executive summary, one paragraph should be dedicated to one chapter. If you now all these our reports have 6 chapters, that means your executive summary should have only 6 paras. You don't mention that chapter 1 is that, don't mention the chapter numbers, but whoever who reads will get the opinion, understanding that, hey, this first para is about the first chapter, second one is second, like that. So that is the way of writing the executive summary, right? And this is split into 2 areas. One is the informational area, other one is the analytical area. So these are the areas coming, general company description, so on and so forth. And why here put this in a lighter color shade, other detailed business model. Remember, friends, business model need not be included in the business plan, right? Several reasons are there. If the business plan is going into the hands of some competitors, it is not good to show what your business model is. That is a company specific thing, right? Sometimes, right? Banks, of course, all right, no harm. But the thing is, you are just showing it to another investor, right? If the investor is also having in the back of his mind to start similar business, he might get certain ideas from your plan. So therefore, that has to be secured. Your part should be, you have to take care of your ideas. So that is why there is no hard and fast rule for you to incorporate the business model in the business plan, right? Okay, so other things, of course, is understood. Finally, there is something called the appendix. Appendix is a doc area which gives the details, right? Your forecast, everything, you can have the summarized version, but the detail you can put in the appendix, right? Because some people may not be interested in reading everything. For them, whatever the essential ideas should be there in the body report, rest of course can be transferred to the appendix. Whoever who is interested may look at it, right? So then we'll just have a look at what those areas briefly, because I'm not going to dwell much on. But the business model, I spent a lot because that is something new to most of us. When I learned MBA, I was doing MBA. For me also, it is a new thing. So that's why I spent a lot of time. But business plan, we all have a vague idea what that is, right, friends? So first one, after second, general company description. So there you have to mention what the name of the company, location, so on and so forth, because you are showing that report to a person who has never cited your place where you are working, etc. So you have to be very clear in your location, so on and so forth. Constitution is whether it is a limited liability company, partnership, proprietorship, your legal standard, right? So share ownership, so on and so forth. Vision, mission, all these are customary. Then you understand what is to be incorporated and not, right? So when you are putting the name, of course, right? Of course, some people go by their horoscopes and all that, put a good name, right? So that is where it is up to you. But only in that name should reflect the business. There should be some sort of rhyming between the name and the business. I remember earlier when director Professor Udita Lienke was there, he was very particular about the names, right? Business names. And he quoted certain examples. And he said there was the metal crusher. You know what metal crusher is? Where, you take large boulders of stones and then thereafter crush it, and then small aggregates being used for road constructions. and even the building construction. And now he said there was a metal crusher. That name of the metal crusher was Saumya. He said, Saumya is where, calm and quiet. No, the thing is that, but metal crusher, if you happen to be going closer to a metal crusher, because you can't even talk to one another, it's where kara sound and all, yeah, right? So like that the name of the business should match. Right? Anyone know is coming from Chilau area? That area? I must mention this also. There is a, piggery. You know what a piggery is, yeah, right? Maybe one of the largest piggeries in Sri Lanka, in Bingiri, closer to Chilau, right? So they, of course, per day they slaughter, I think about 15 or 15 the pigs per day. Slaughter 15 pigs. So imagine the size of the piggery, and the name of the piggery is that, not the piggery, and then there's another the shop that the owner is operating. So all this pork is being sold there. The name of the shop is Chutiduwa Stores. Okay. So anyway, he had an answer. He said that is the first name that he has started the business in a smaller way, and then he believes it is lucky. And then he said during that time only my youngest daughter was born, and then he has put that name there. Right? Anyway, so whenever you are putting a name to the business, especially our ESRP people, right? Make sure that the name reflects what you are doing. Huh? Okay. So then this is about the general description, and thereafter, of course, I can just, when you talk about here, the owner's credentials, that is very important, because especially when you are showing the plan to the bank or investor, that is very important. Now, I have seen this one of the subsidiaries of the Mass Group, right? Now, say they talk about the Deshamane Mahesh Amalin, co-founder, and even the credentials, completed education, strategic leadership, so on and so forth. Those, of course, matter a lot to attract the investor, depending on the audience, right? Then about the products and services. So what you have to mention, what the product services you are. So this, of course, in some business plans, I have seen this one. Now, if it is an Ayurveda dairy product, now this is linked natural, right? This is what they have shown their visual and then explain, right? And this is very important. Our R&D innovations are a blend of Ayurvedic wisdom, because the thing is that they are not addressing only the Ayurvedic people. So that is why blend of Ayurvedic. So all this is a smaller message, but it carries, right? Goes to the recipients. And look at this one. Now this is Kothmale product. So once again, they describe their products, right? And this is very important. Low fat, right? Zero fat. So those are the things where the market is interested in. And another one I can say, this is the MBA beverages. Now see, this is a tea concentration, right? So that is being exported. Now they mention this is in this particular factory, Southern Central, because those who are familiar with the tea industry, tea is separated into three areas: high grown, mid grown, low grown. Right? All these two really, that area up country, it is high grown. That goes to the European market. Whereas the low grown is the captive market for us. You all know, some of you all. That is where we get money, Middle East, Russia, those countries. And by this way, they are showing that, hey, this is the low grown tree. So like that, it carries very shorter, but only thing it captures. So that is how we had to, write down the description of the product. Okay, so that is, of course, other than that, market analysis, of course, you have well covered in your marketing and the strategies lectures. So that part is where you talk about the industry statistics, so on and so forth, right? Then about the industry strategies, you talk about the SWOT, PESTIL, so on and so forth. So those are incorporated in the plan about whatever the business you are going to do it, right? And your promotional strategies, so on and so forth. And even the operational feasibility is very important, because the thing is, everything may be okay, but only thing thereafter, if the operational part is having some hindrances, that is a problem, right? For that one, we can incorporate this Gantt chart, monitoring mechanism, so on and so forth. And how to procure the raw materials, etc., right? Well, then I will just show you a small video, right, on a plan of a restaurant. Now remember, now this particular thing follows a different format, but it includes everything. All other we have spoken earlier. So we'll look at that as well.
Writing a business plan is the first step in opening a restaurant and increasing your chance to succeed in the competitive sector. A business concept is not merely notes that serve as a reference on how you cook a particular recipe, but it is a document that details your goals, missions, time schedules, actions, results, and growth. It serves as your ticket to get additional funding and fighting stiff competition. Why do you need business plan for your restaurant business? It is needed to stay competitive and to survive the competitors. It is needed to get additional funding from financial institutions, shareholders, and investors. It increases the chances of becoming successful in the competitive industry. To attract new investors. To attract new customers, retain existing customers, and establish customer loyalty. To assess its potential of expanding to new areas. To write a restaurant business plan, you need to follow 7 steps. 1. Executive summary. Here, you have to write about business objectives, mission statement, guiding principles, and key to success. The executive summary outlines the plan's key sections such as the company's mission and goals, target markets, products and services, primary competitors, marketing strategy, and financials. The summary should be 1 to 2 pages long and should convince the reader to review the entire business plan. 2. Company description. The company description provides a clear idea of what your company is all about, what it does, and how it will operate. In other words, it articulates your company's mission statement, which is a brief, formal declaration that describes the specific purpose for your business. In company description, you need cover details of ownership, legal form, startup summary, and location and facilities. 3. Services. Services includes daily operations and productions, competitive comparison, suppliers, management controls, order guide, weekly inventory, daily inventory tracking, administrative systems, daily cash control, weekly prime cost reports, payroll processing, and future services. 4. Market analysis. Market analysis is a vital step for writing a restaurant business plan. Here, you need to include industry analysis, market size, industry participants, main competitors, market segments, market tests, target market segment strategy, market needs, market trends, market growth, and positioning. If you want to open a restaurant, you need to decide what type of restaurant you want to open, e.g. fast food, Chinese takeaway, or a franchise restaurant. Then decide in which location you want to operate. Now you can do a thorough evaluation of the area, e.g. how many restaurants operate in the area? What types of restaurants are there? Are there enough people in the area to sustain all the restaurants? Will your restaurant be unique in the area? When are the busy times? What is the average turnover per restaurant? What are the rental rates and conditions? Is staff available? What is the salary and wage cost? 5. Marketing strategy and implementation. The single most important step you can take as an entrepreneur is to effectively market your goods and services. You can have the best products in the world, but if no one knows about them, your business will fail. You have to ask yourself about, what are you selling? How much will you charge? What is your target market? How people will recognize your restaurants. You can include strength, weaknesses, opportunities, and threats in your marketing strategy. Also, you must need to add strategy pyramid, unique selling proposition, competitive edge, marketing strategy and positioning, positioning statement, pricing strategy, promotion and advertising strategy, website, marketing programs, sales strategy, sales forecasts and programs, legal documents, milestones, and exit strategy. There are a number of excellent resources available to make the process of creating and planning at least a little bit easier. For instance, The many guides, books, and publications available at the local and online bookstore can contain a wealth of information on how to create an enterprise that will get the attention and the money that is needed to get the new business up and running. 6. Organization and management. This section identifies the key business manager and the organizational structure. This is a very important section when you have a staff. It is also critical when you are seeking capital. Investors will thoroughly examine the backgrounds of the management team in charge of your business. In this section, you need to add the organizational structure, management team gaps, and personnel plan. What do people expect in a restaurant? Good food and drinks, excellent service, comfortable ambience, friendly staff, and a place where they can unwind and have a good time. If you're in the restaurant business, you need to know all these things, and more important, implement them. A restaurant business plan will detail and outline all these things for you. It lays down the objectives that your business needs to take, and recourse of action should you need it in certain situations. 7. Financial plan. The last section of the business plan outlines your financial projections for the first several years of the business. Ideally, this includes the production of several forms including an income statement, a cash flow analysis, and a break-even analysis. In this last step, you need to cover important assumptions, startup costs, source and use of funds, break-even analysis, projected profit and loss, projected cash flow, projected balance sheets, business ratios, hourly labor schedule, and weekly sales projections. In a restaurant business, preparing a business plan is very necessary as it gives you and the investors an absolute idea about how you would realize and execute the entire business plan options. A well-researched plan will help you make the correct business decisions and improve your chances of business success. If you found this video helpful, then do not
So you would have noticed that because the structure of that plan is little different, but only thing it gives an understanding on what items to be incorporated. Now, the next part is about the financial feasibility. We call it feasibility because still it is about to take place. Therefore, feasibility. We have to show your project is feasible, the business is feasible. So here we are now, up to now, there is no number crunching. But in this part, all numbers should be there. Your projections, right? You have to do the financial cost, means of financing, everything. All these what you have learned in managerial financing, right? Or the basic accounting, those part has to be. Now, this is the part where all these things come into play, where you convince through numbers. So here, this part is very interesting because you can't make any mistake here. Only thing, but supported by assumptions. So where you had, all these forecasts, P&L, balance sheet, so on and so forth, right? All these statements have to be there. And after that, these indicators, payback period, cost benefit analysis, break even, ratio analysis. So whatever the applicable ratios, liquidity ratios, right? All these things. So I'm not going to dwell on this because this is your managerial finance stuff where you are putting it, right? So that part has to be there. But if it is say or a longer period you are having the returns, then NPV or discounted cash flow data in IRR, those things have to be incorporated, right? For the person to take a decision. Financial feasibility. Then this is important, the contingency plan. Contingency in this is what something goes wrong. So that has to be all, you have to convince the person reader, right? That you have taken all precautionary measures if something goes wrong. That's the what if loop. Now here, this should incorporate measures to be taken in assumptions for forecast show some deviations. You believe that inflation is at this rate, but inflation may go up, right? So thereafter, if the sales drop by some identified percent, 10%, you forecast 10% growth. But actually, it may be what if it stagnates, so on and so forth, right? All these things, of course, where you are just showing. Fortunately, nowadays, unlike in good old days, now we have the Excel. In the Excel, it's a matter of changing one particular variable, and thereafter, you can see the bottom line, what is happening in the bottom line. So those have to be brought in, right? Not all the scenarios, but most likely scenarios, right? usually the worst case scenario, right? That has to be shown. Any other risk, the how to bear the risk, so on and so forth. Right, friends. So with that one, I will just show you another the video on this, a very smaller one about the business plan mistakes. Right. So we'll look at this, a very shorter one. Now we'll look at this as well.
So here are 6 business plan mistakes that I've seen over the years at venture capital. Number one, right? The plan has become the deck. In other words, I would spend time working on a 15-page PowerPoint pitch deck rather than a 40-page single-space business plan. That was nice 10 years ago. Today, spend that time working on business. Number 2, hiring a consultant. You don't need one, right? As venture capitalists, we're looking for people who understand their business, who can write about it. We're not looking for perfect business plans or perfect pitch decks. We're looking for folks who are passionate about their business, not consultants who are passionate about their business. Number 3, okay? Oftentimes I see a great pitch deck that talks about the product that leaves out completely any mention of the management team. As venture capitalists, we're investing in management teams, not products or ideas. So prominently put in your pitch deck description of the management team and why that matters to this particular project that you may be working on. Number 4, unrealistic projections. Right? It's really easy. Turn to projections, and you should have projections in your slide deck. If you see those projections, I just saw one the other day that had the company going from 0 to $1.7 billion in revenue in 2 years. What it says is, obviously that's unrealistic, but it also says that as a CEO or founder, you don't have really good basic business sense about how realistic the business is and how we're going to grow that business. Number 5, underestimating competition. Can't tell you how many times I've seen people say it's $1 billion market and there's no one in it. Okay, be realistic about the competition. We're going to find out who's doing what and where. It helps us, if you, as venture capitalists, if you tell us where that competition is, and it also helps us understand that you are realistic about the market and the people against whom you're competing. The 6th one is, don't put a valuation in your deck or business plan. The market's going to set that. So don't go out, a strong recommendation is, don't go out and say we're going to raise this amount of money at this price. Let the market determine where that price is going to be. So 6 business plan mistakes. There's probably others, but those are ones that we see almost every day.
Right. So this, of course, is a very summarized form of the mistake that usually people make. And then there are many, you can read, there are a lot of articles written on specific cases, what went wrong with particular things, right? So those, of course, are failure cases, which we can't just study under your MF, the case study. But there are people who have studied and then just publish papers. So those, of course, will get us some insights, right? Okay, so with that one, we'll proceed. We come to the last one, right? So here the last part of the business plan, that is the appendix. So in the appendix, these are the detailed, if any detailed account statement, because you put only the summary. How many of you all have seen the central bank annual report? In the central bank annual report, what they do is, in the country situation, they just publish the basic parts of the accounts, national accounts. And in the appendix, because that particular annual reports, appendices are more than, number of pages are more than the body report. Because all these details, into very finer details, forecast, everything are being given there. Some of the annual reports it is so, some of the reports it is, right? So therefore, all these detailed part should be given there. And the market information report, so on and so forth. And some people had put this one, right? Imagine now you're going to start a particular the business which needs a lot of approvals, right? So manufacturing cosmetics, pharmaceuticals. So for these things, a lot of lengthy approvals are there. So for that one, if you have already taken that step, getting the approvals, have a kickstart. So you can just put whatever the approvals that they have taken. So whatever it is pertaining to the positive attitude of the people, right? So building plan, and this building plan, of course, is a larger one. You can just put a summarized version, smaller miniature one. And this recommendations by others, some people put, especially when you produce the plan to the bank for financing, right? Sometimes the bank people may not know who you are. And if there are certain credentials, right, certain award that you have won, So that part, some people append just to build up the trust, confidence. So whatever the thing, any paper articles, sometimes they put, right? So any other relevant information that has to be put in the appendix. Whoever who wants can refer. And even when the person is interviewed or talk directly regarding the plan, and certain information the person asks, other person asks, then it is available in the appendix. So then it is one comprehensive document you are giving it to the recipient, and with that one your match is over. So this is what all about the business plan, business model, etc. Right? So here, if I summarize what I did today, is I introduce what a business model is. For that one, as a prelude, we studied, we understood what a model is. Then thereafter, see how the word adds. When the word the business got added to that one. So what is the difference? Whether it is the same characteristics, etc. So with that one, we built up an understanding on what the business model is. So anyone who now has any doubt about what a business model, clear? I believe everything is clear. Thereafter, we studied two popular business models, Osterwalder's one, 9-block model, and other one is the Lean Canvas by Yash Maurya. So far, those are the two models that we use. Especially, I told all those who are doing the ESRPs or anyone who is going to start a business, new business, it should be the Lean Canvas, what Ash Maurya has elaborated, right? So thereafter, we went on doing some exercises. After that, we studied what the elements of a business plan is, right? That's it. So finally, all these 7 areas we studied. So I believe something is there for you to take away today. So that's it. And then finally, this remark. The best business plans don't predict the future. They prepare you to, right, shape it with a clear business model. So that is where the two merge together, business plan and the business model. So it is up to you to go and build something that matters. That's it, right? So any questions from your side? Any clarifications? In absence of that, now next Saturday, it would be Dr. Travis will be taking it. You have the course outline, now it is there. So it will be one after another one. So after that, I will be coming. So that's it. I don't know whether next week, whether the two groups would be merged or it will be separate. Same. Separate, no? Right, right. Okay. So if it is the same, then it is easy for us also, right? Right, okay. I wish you all the success in your rest of the MBA journey, and then those who are especially doing the ESRPs, right? So they all of you all would have received the remarks on now after submission of the proposals, right? MFRP, of course, no option, they will be there. But only thing ESRPs, right? Depending on the comments, even the case studies, they may have to shift to the MFRPs, huh? Right. Okay, friends, since there are no other questions, right, we'll call it a day. Right?
Thank you, sir. Thank you very much.